Brother. Good morning, guys. Good morning. Good morning. Good morning. Good morning, everybody. All right, let's get started. Good morning. Good morning. Good morning. Good morning. I have to share the Discord. I have to share the link to the Discord. All right, I'll be right back. Oh, okay. All right. So for everyone that's watching that's new, we trade options. We trade the at the money options on the SPY and the closest dated expiration. So we're trading the January 10th contracts. And today, I am going to stay here. I'm going to stay here basically if the first 5 trades we make for some odd reason don't work. I'm going to stay until we make 5 green trades afterward. I'm just going to, that's it. Like today, this is going to be like a marathon stream 100%. So I'll be here. Hopefully we just make a bunch of winning trades. That'd be great. But yeah, it's I'm excited. So yeah. We're only gonna be taking high quality trades. Yeah, also US 500 same as SPY. Can I trade US 5? Yeah, US 500 is the same as the SPY. Yeah. Hope you're feeling better. Good morning. Yeah, you know. Thank God I'm able to. It is what it is. Only 388.40, I think, is the 38.2% fib. It's one of the major fib levels. Let me look at it. It's a 38.2% fib from the swing high to the swing low, and that's basically where we're trading at right now. On the SPY, 388.66 is also just major support in general. IV is a bit higher than normal because Powell.
So yes, if you'd asked that question in 2021, maybe, you know, people said, well, financial crises, but I think you need a framework that, as Jay was saying, is stable over the full cycle of things that are happening and doesn't get, you know, it gets tuned, but and also, let's look at the rest of the world, please. I think if we're looking at developing economies, emerging markets, which are also struggling to find frameworks, that I wouldn't tell the IMF to change what it's doing in terms of central bank independence.
All right, so maybe we'll go to the section when the public is involved, the Q&A sessions. So if you want to say something, please.
You guys, so basically, Fed Powell is at.
Pose a question.
Fed Powell is at. This is speech basically that's going on. Not really a speech, but it's a panel. So.
Okay, Richard Portes, please.
Yeah, we're coming through. Richard Portes, London Business School and European Systemic Risk Board, where I have learned over several years a great deal from Stefan English. No more of that now, but maybe later. I'm not totally convinced that we now have a resilient system. Mark Carney said that in 2017 as his final statement from the Financial Stability Board. But then the banks, yes, but we found in early 2020 that that wasn't true of the non-banks, in particular the money market funds, and the central banks had to step in. Central banks don't like to do that, quite rightly. They don't like to have to act as market makers of last resort. And that may be a compromise of the mandate. So the questions that I would put to the panel, as we've seen, very recently, the rise in nominal rates is exposing financial fragilities in the system. They came from the search for yield, whatever you want to call it. And we saw an extreme example of that in the United Kingdom in September of this past year. Now, in those circumstances, should financial stability be explicitly in the mandate? Should we be recognizing reality, what central banks actually do in practice? Would that help avoid financial dominance if it were in the mandate? Given the huge costs of financial...
This is risky. This is a very, very risky trade. Very, very light. I'm taking SPY calls. Very, very light.
Recognize reality.
This is a bit risky. So we're going to have like a 388 stop. I want to feel out how the contracts and everything play. But this is... it's worth taking. We can get push up.
The mandate, most central banks now. And
but trade light on this position. be light, especially while the speech and everything is going on. Let me mute these guys 1 second.
The obvious instrument is
While the speech and everything is going on, everything should be light, feeling out how the market and everything plays out. So, in SPY calls.
but also ensures that the scale of that intervention is also under the control of the central bank and not something which the actors themselves in the financial system can expand to almost any number simply by the actions that they take. It's ensuring that there is enough collateral against
Take some profits.
to lend by the central bank.
If this breaks above to what the fudger? Let's go. More. Very nice.
My guess is, yes, you're right, Richard, that there will be an expansion of the mandate and that it's there in principle, but it needs to be made much more concrete by saying
Much more concrete
what are the
than you have.
institutions, what are the circumstances, whether it's
Wow, getting
maturities,
calls
or something
with the
else
momentum going up,
that would
so easy.
justify an intervention.
Love it.
And to have sufficient regulation.
So now I have a stop loss for the remaining
Ex ante to limit the size of the intervention.
at 124.
Yeah, no, I agree that
All right, I'm out. I'll be right back.
For central banks to be involved in macroprudential policy is well defined. So the Bundesbank, according to the German financial stability law, has a clear mandate in that regard. It's a joint mandate with the supervisory authority and with the Ministry of Finance, because as we all know, there's a lot of distributional implications that macroprudential policy decisions can have. So it's not us alone. And I think also the ECB has clarified in its strategy review how monetary policy and financial stability interact. All
right.
The one point that I would like to make in addition is that we also do have frameworks for evaluation of policies and whether we've done enough. So the FSB, the Financial Stability Board, started this big project in 2017 and looked at the reforms that have been implemented, found no major side effects, found that a lot has been achieved, but there's still also gaps when it comes to resolution reforms. So I think also for the areas that you mentioned, the non-bank financial intermediation space, we clearly have to implement policies and look at the resilience in that part. So I fully agree. We can never say that the job is done and we can all lay back. That's what we're there for.
Jay, please.
Just to add in.
So everyone that's watching the stream on YouTube as well, make sure you guys watch the stream on Twitch, because there's less of a delay. So when I'm making these scalps, it's very important to be able to listen at the as soon as I'm trying to enter or exit. Otherwise, there's about a 10 or 15 second delay. And obviously you don't want that to happen. So the Twitch is twitch.tv/Hamid Trades. Very simply.
Discussing central bank independence from, let's call it, political pressure, and of course bipartisan pressure would be even worse. But there's something more subtle about the independence issue, which I think we can discuss in Sweden right now. I'm personally interested in that. I worked in the finance ministry many years ago, but I was also on the general board of the Riksbank, Riksbanksfullmäktige, not the board of directors, but the general board before, in the old evil days before independence. Anyway, in Sweden we have 4 institutions: the Riksbank, the Financial Supervisory Authority, the Debt Office, and of course the Minister of Finance. And they often work with similar issues, obviously. And they often have to cooperate. So the question here is, how independent can the central bank be in reality? To what extent must the central bank discuss, compromise, lean against the wind or with the wind, and be politically agile at the same time as it is formally independent? Maybe it sounds like a stupid question, but I think actually this is almost as important as the, let's call it the big issue of political independence. I'd like to hear sort of your experiences from this. How independent can the central bank really be?
Can I start by saying, I think we have to distinguish between monetary policy independence, where the case, I think, is very strong, from all the other activities of the central bank. So as a regulator, the United States, Fed's very powerful, but there are many other regulators it deals with. And I think the same's true in most countries. So that it's very different conceptually, and I think all regulators, we'd like to be independent from over political influence and being bought off, or, you know, even if it's only psychically held hostage by those that it regulates. But I think that's, the central bank in general, and looking at all its functions, it clearly has to coordinate with other agencies. It clearly has to be subordinate to political policy, as we had in the first session here.
So I can speak from my experience, which was that between 1997, when the Bank of England was made independent, and 2013, when I left, there wasn't a single episode where the elected politicians put pressure on the bank to adopt one interest rate policy or change rather than any other. Whereas, as Jay talked about, the facilities that were put in place in the US under the new regime, which, you know, was meant in some sense to give more control to elected politicians, we in the Bank of England in 2010 really introduced a compact between the Treasury and the Chancellor on the one hand and the Bank of England on the other, which said that any lender of last resort operation had to be approved by the Treasury. That seems to me perfectly reasonable and appropriate. And you have a private conversation where you explain why you want to do it. And in very few cases could I imagine that the Treasury would say, if the central bank feels that a lender of last resort operation is appropriate to prevent some collapse, the idea that the Treasury is going to say you can't do it, I think is not likely to be true. But since taxpayers' money is at risk, it's perfectly reasonable for the Treasury to have an input on it. There was never any conflict between these two different approaches in the different areas of policy. So I think the important thing is for it to be quite clear what that policy responsibility is, whether it's in the US with changes in legislation or the compact agreed between the bank and the Treasury in the UK. It's quite clear what the lines of responsibility are and who has to be consulted. That's the important thing. That's what prevents, I think, things going very wrong. It's where the same...
SPY calls 387.30, stop that. It's kind of moved too quick.
Feel that they are the people responsible for a particular policy that you get difficulty.
Damn.
Yeah, well, to express it differently and perhaps more simply, you know, it's a big difference between taking the decision in deliberation with others.
That moved too quick.
After deliberation.
But I'm in...
and that's the responsibility point, right? So, yes, please.
Thank you very much for the panel. Joachim Nagel for the Bundesbank. Let me put it like this. I think it was already said by Ken Rockoff. I think inflation is back now.
I hope you guys took it, even if you took it late.
More or less, in my interpretation, still in the midst of a storm. And the storm is not over. So
yeah, you guys took it a bit late. Should be up at least like
during the last 10
a good amount.
years, we were the most welcome partners of
So make sure you guys take some profits and now just leave runners. And basically now for the runners,
fought against all the financial crises and did what we did. But this came.
I'm gonna have a stop loss for 388.
And now in the next years, the politicians have to learn that monetary policy is coming with a price. So maybe some of us, they have to announce that there are maybe losses or not the profits we came up in the past. What is your opinion about that? Is that influencing the way we are being perceived in the future about our independency?
Who wants to take that on?
Well, I'll take it on. It's related to something that I said, which is that the pressures from politicians will be greater and more complex today than they were in the 1990s. And you're absolutely
make sure you guys
right.
take profits. Like, don't,
the
we'll find something safer, but mitigate your risk on this play. Don't go all in just because you see a big green candle. Usually when a big green candle happens,
but I don't really
there has to be some period of stagnation. Can you guys hear me? Can you guys hear me well while this is still playing in the background?
Politicians will always want other people to do things that would benefit their own short-run interests.
All right, perfect.
That's where central banks will remain solid and maintain their independence in respect of monetary policy, and they have every incentive to.
As long as this remains above 388.20, this is good. Oh my goodness! Yeah. All right, everyone that even got in late, you guys are good.
Clearly,
so very nice.
There are many cases where, given the central bank's independence, politicians will look to the central bank, as Mervyn saying, to do something they should
Take
do,
more.
but they don't want to do, or political interests will.
I mean, I got
something to do with inequality or something to do with the environment that they're not getting through.
You guys should be up at least like 15 or 20%.
And they'll
but
view
this,
the central bank perhaps as an end.
I hate when it goes too quick for other
But of
people
course,
to.
At the end of the day, the central bank can't take political decisions consistently and maintain its independence. They're deep crises where the central bank just has to.
Calls are freaking holding value beautifully right now.
Is looking to the political
and we're
system
moving
to
up,
back it
so
up.
this is
Look at
good.
Developing economies, the normal rhythm of things is the central bank moves, but then the Treasury kind of takes over everything it did, and everybody knows that that's
setting a stop loss for 175.
So it works that way because the central bank can move so quickly.
For the rest, 170.
It needs to be
170.
very wary of taking political decisions.
Stefan.
Outside the topic
Okay.
of the panel, but since Ken, you
Look
are
for
on
another
the
plate.
panel, I'll ask you anyway. You wrote a nice little book called The Curse of Cash. And in this environment, cash is disappearing. So what's your advice?
Well, isn't it wonderful that the people who organized this event had a panel just before us about this? But no, I think one of the things that's been very naive about I will call them crypto evangelists, is that they can somehow do something better and have an end around. And in fact, if you look at the history of money, which is probably what I should have called my book, and you look at the private sector always invents everything, but for many reasons, the governments eventually regulate it and even sometimes appropriate it. And I think, that's what we're seeing.
What a smug piece of crap. Who is this guy?
Digital space, you need rules.
What is this guy's name? Who the hell is this guy?
Earlier, but I have to mention FTX. That was kind of a success for the regulatory community. It didn't do anything. It's the $32 billion at the heart of the crypto system. Guardrails, and the central banks need to do that. But anyway, I've learned from you over the years on this issue, so thank you for asking that question.
Since we're spiraling out of control here with questions about anything, we should try to wrap up. So all good things must come to an end, and I'm not going to try to to summarize what has been said, but I'd like to end with some final remarks. But really just 1 minute for each of you to summarize for the audience, which is the most important thing that we should take away from the panel. If you had to expound on one, which would that be? Who wants to take that first? Jay?
So I'll just conclude by saying that for us, central bank independence is a matter of statute. It's not in our constitution. It's just an institutional arrangement that has served the public well, nothing more, nothing less. And as long as it does serve the public well over time, then I think it's safe, and I think it's safe now. But that means we've got to be committed to achieving our goals and to sticking to this precious grant of independence.
Well, this is
to keep
risky.
it
I would.
when you deserve it, and that means stick to that work and don't look for broader things. Where it was discussed at the first panel, really, we shouldn't be getting ahead of where the public is if there's no specific mandate. And in the case of the U.S., that's a particularly salient point today.
Claudia?
Yeah, no,
It's your bottom line.
I fully agree with what Jay just said, and that's also again when you look at the German history. So sticking to the mandate and deliver. I mean, this is what's building trust. And I think when it comes to financial stability, we're actually at a critical juncture because the system has not been fully tested. So we have to make sure that we also deliver on both of our mandates, price and financial stability.
Erwin?
All good things do not have to come to an end, and central bank independence is one of them. And I think the point that comes out of all this is you can have a debate about whether interest rates should go up, and if so, by how much, or go down a bit. That's to do with the actual decision that's being made in a
Markets look very weak.
But institutional
They're making it seem like they could drop it.
really matter. And
Let's see if they could make some sort of a level of support here before going long. But
will live longer than
immediately, this definitely looks very, very weak.
I also believe central bank independence will go on for many decades to come. It's hard to know forever. And I would just again argue, as I said in my remarks, that it's really been maybe the most successful policy innovation post-World War II and continues to be.
Okay, let's stop at that and take early coffee. Thank you, with a big applause to the panel.
One announcement to make. It's time for coffee, but there will be a dinner tonight, and I'll talk more about that later on today. But for those guests,
are we invited
at the hotel? This hotel, please make sure to collect your coats during this break, because there will not be a lot of time between the end of the symposium and the dinner. Okay.
Okay. Thank you.
So please enjoy your coffee.
Thank you so much. All right. I feel like, what is this? I feel like I'm in Hawaii. Is that it? Good. Yeah. All right. Okay, so yeah, we broke the lows. Otherwise, you guys know me, I would have tried to go long, but the momentum is it was still very, very bearish. That's why initially over here, usually we could have just went long with the low of this candle, right? But you also have to look at what was going on earlier in the day. Huge selling pressure, and then just immediately as we were trying to I'm in light SPY calls 388.80 stop. Let's see if this low holds. Basically, we're just going long with this low as a support. Very light. Momentum is still very bearish, but this was the fake out for bulls. Let's see if now this we can get a move up. Worth taking. Always take some profit at 10%. Always take some profit at 10%. I'm gonna have a stop loss at break even for the rest. So I'm having a stop loss at 0.97 for the rest. I hope this continues up, but let's see. This is gonna be a very important minute. But it's definitely not a time to try to enter into longs. We got in at a better time. Yeah. Very nice. You guys could actually either yeah, make sure you guys nice. Beautiful. Beautiful, beautiful, beautiful. See, who said I only take shorts? Very nice. Looks like we won't have to do a marathon stream. Thankfully. All right, we're good. Lie me. All right. As long as this remains above 3. All right. I have a stop loss at 110 for the rest. Almost stopped me out. Let's see if this could get to 30%. Everyone should be up around probably like everyone should be up like 25%. So far, so good. I mean, this is a good setup for a rip upwards. Make sure you guys take profit. So initially, the reason why we took this long is because, first of all, on a daily chart, we're still technically a bit bullish, right? Second of all, initially at 9:59, when we had this candle here, this was a bull trap. So this whole situation was a bull trap. So people wanted to go long and have like a bit of a bounce upwards, but I knew that it was weak, and I'm out. But so anyway, I knew that this was weak and I wanted it to fall lower, right? Once we made another leg down, once the initial people that were bullish over here became bearish, that is basically when I wanted to go long. And we went long basically just very simply at this level of support. No, we're currently at 3. Currently at 3 green trades. So we're 3 for 3. And I didn't say 5 green trades. I said so I said if we start the stream and I have 5 red trades in a row, I'm gonna stay here until we have 5 green, basically until we have more trades green than red. So far, doesn't look like I'm gonna have to do that. Crazy. You have day on the SPY, you have day on the IWM, you have day on the NASDAQ. Many people are trying to go long right now with a 389.30 stop. You could do that, but it's very, very risky. I'm not going to take it myself. But this is something that you're basically playing alongside the momentum of a big green candle like this. And basically, if it holds above prior levels of support, then it's like a tight like trade that you could basically still take for a move upwards. But it's not too worth it. But generally, like moving forward, right? So like another thing is you could take a you can make a fib level of this candle, right? And so yeah, basically it coincides perfectly actually with the 38.2% fib. I was saying 389.30, right? So as you can see here, 389.30 389.30 is literally the 38.2% fib. So I just did this based off of like a little eye test or whatever, but it generally if the 38.2% fib can hold as support, this continues upwards. But the longer this stagnates here, the less likely. But you can see that we're still holding above 389.30. Broke another high. So if you guys are completely new, you guys don't understand what to do, you guys are like watching this and you don't know where to start, send me a DM on Instagram or on Discord. I could send you guys a bunch of free courses and books that you guys could watch to get started. Everything is free online. You guys don't need to pay. You could, but I could send you guys a bunch of free stuff. So it's up to you. Yeah, so the 38.2 freaking fib worked beautifully. And you could do the same thing in the reverse. So when we have a big red candle, as long as it remains basically at the 38.2% fib for like shorts, it's the same concept. Because you want to follow the momentum. If the 38.2% fib percentage of that candle does not get breached, that means that the momentum of the move is still in that direction. Oh, let me sorry about that. We're trading the SP 500 SPY. To everyone on TikTok that's watching the For You page, you know, joining the stream, say hello. Because at the end of the day, there's no one else live streaming everything like this completely for free the way that I am. And we have a lot of interesting news coming out very, very soon. So yeah, man. People are going to be watching these streams in years. They're going to be like, wow. Just watch. Everyone that's watching is still very, very early. And I can't thank you guys enough for your support. But we're going to make big changes. 2023 is going to be a really, really monstrous year. It's going to be a very, very amazing year for everybody that's been following the journey and everything. You think I give everything like this for free, like without having like, just watch. Just watch. But yeah, man, I am always going to provide everything for free. So, the trades and everything. So. You know, like all of the like I don't go to clubs, I don't party, I don't do anything like that. But you know, all of these traders that basically sell. Ooh, 1 second. One moment. My Discord and YouTube. My Discord is the same exact, just copy. I have like 6,000 followers or something. And I don't follow you, and I'll never message you asking for Bitcoin or anything like that. So please don't. Please don't give anyone Bitcoin that uses my name. I lost like 15 pounds over the past like week. This morning I probably like vomit, like phlegm wise. I'm sorry to be graphic, but phlegm wise, a good water bottle. And it's like when I feel like this, it makes me even more excited to work and do stuff, because it's like it makes me better. Forces you to become better, because not everything in life is going to be perfect, and it's the days that like you push through that define your character. And yeah, it's too early to go long. We need to see. Yeah, this is a disgusting setup at the moment to go long, even if they rip it up. Yeah, also I'm very sorry, I don't really look at the chat as much as I should, I guess. I mean, but yeah, I don't really look at the chat as much while I'm streaming, because I'm trying to look for good trade setups. So, you know, I'm sorry, I don't mean to, like, I don't mean, because it's disrespectful when you ask someone a question and they don't respond. So that's not my intention. I'm not trying to disrespect anybody or ignore anybody, anything like that. So, yeah. It's all love. Love you guys. Thank you, thank you, thank you. Momentum is still bearish. This looks very similar to the situation that we had like over here, 959. Yeah, it looks, yeah, basically looks very similar to this. Yep. Now let's see if we can basically go long. Similarly, how we went long over here on that next leg down. Let's see if as we make another leg, it creates a level of support that we can go long again. Very simple. The only point in time where you would go long on a setup like this is if the day was early on in the day and we had like a green move and like other stocks were also bullish. So yesterday, if something like this happened, like a very ugly like reversal candle, very ugly, but the momentum immediately of like the past candles were very bearish. If the overall market is bullish, then you could go long with a stop loss of this. But Right now, just wait. I'm gonna take very light SPY calls, 388.60 stop. $388.60. Beautiful. It's beautiful. What else? What are you gonna do? That's it. Take some profits. Quick move. What are you gonna do? Quick 10% candle. That's it. I have a stop loss, basically at, yeah, I have a stop loss at break even. All right. If this remains above 388.80, then we're good. No, I'm on Twitch, YouTube. So on YouTube, I write out my I don't write out. I make a video every day about the daily recap of the overall market, so we understand like the overall sentiment and how everything is moving and how everything is going, etc., etc. So you guys should definitely watch me on YouTube as well. If you're new, honestly, like I try to make it as simple and like easy and everything as possible, and it's like I try to make videos that like I wish I had when I was starting out. Basically, that's basically what I do. So you can see that we held 388.80. That's it. This is the 1 minute time frame. We're trading the SPY. So this is the ticker that we're trading on. All right. Damn. I'm out. But yeah. Good little setup. So the Twitch is twitch.tv/Hamid Trades. It's the same. It's the same username as my social medias and stuff. And I stream from 9:30 to, I usually stream to at least like 11 to 11:30. But on days where like we have like a bunch of green trades and everything like that, like there's no point of over trading. Alrighty. So this indicator, nice, man. Thanks for. It's nice to see everyone is helping each other in the chat when I can't. So that's dope. Very nice. If you're in Europe, you should be able to trade on Tasty Trades or on Interactive Brokers. Try that out for Europeans. So yeah, this indicator is the Bollinger Band. The yellow line is the 20 exponential moving average. We're currently not in a trade. We're just waiting. Going long here is sort of like a gamble, to be honest. Let's see. Yeah. Yep. Let's see if we could go long on this next leg. So once again, there were a lot of people that became bullish right here on this green candle. By this point, those people are going to start becoming bearish, and then it would be a good opportunity for them to rip it up. But the momentum is still bearish. I don't want to force any long trade just for the sake of a leg down. Just let the market even out, give us a trade. So far, so good. 4 for 4 for today. We don't want to. No point of taking any stupid trades. We're just going to continue taking high quality, good setups. Calls are barely moving. Generally, when we're moving in a direction and the corresponding option contract of that direction barely moves, it's generally a good sign for a continued move in that direction. But not always. Generally it is. So maybe this doesn't work. It's starting to look like after the next leg, maybe we could get a big move up. Let's see. It's definitely not a good time to long. Have to wait. Oof, because they made a lot of people bullish with this wick up. This is risky still. Let's take SPY calls 3690 stop. This is the risky. Damn, bro. All right, nice. Very good. Very good. Yeah, contracts you can see are barely moving in accordance to like this big green candle. If this move happened earlier in the day, this would have been like at least like a 15% candle. I have a stop loss at 0.93. I don't want to be the move happened too quick, and yeah. Let's see. I'm selling some at $1. And then now for the rest, I have a stop loss at 0.93. Oh well, I mean, like the contracts aren't moving as well as they should, but yeah, that is what it is. For late bulls, this is a very, very risky long opportunity, unfortunately. And you can see most of these setups that are happening, like the pops and everything, they're very quick. All right. We're still holding above the 50. But the momentum upwards is still there, but the contracts are moving very poorly. So 387.10. Yeah. Let's see if we could re-enter. The momentum is this is going to be the riskiest trade of the day so far. So this next trade, whatever it is, let's go light. Let us see. 6 buy calls, 36.40 stop. Contracts are still moving pretty poorly. So it's, yeah. Okay. $386.40. If this remains above that, then we're good. You can see the contracts are still moving like very, very slow in accordance to like big green candles. All right, I'm selling some. Oh, now I'm selling some. Oh, wait. Yeah. Now I'm selling some. Nice. Jeez, man. What a blessing, bro. Crazy. Stop loss at 110 for the rest. Now, as a learning moment, basically, as long as this remains above 386.80, we should continue up. Very simple. Yeah, man. Easy money. Very simple, easy money. Yo, guys, if you guys made money for today, can you guys put ones in the chat, please? I would really appreciate it. This is gonna go on TikTok, so I need to see a stream of ones. Be great. One. For everybody on Twitch and YouTube. For everyone on TikTok, if you guys want to go. Nice. This is good. Much better day than yesterday. Nice. Very good. Very good. I am sorry. Left the screen. Trading the S&P 500. This can just continue flying, to be honest. Holy crap. Contracts up almost 40%. Very nice. So we got in early on. We mitigated our risk. We waited. We mitigated our risk. We entered at a point. So basically, I also entered at a point when the contracts were not really moving. So even if we had a move downwards, it wouldn't be a huge move down in terms of dollar value. But now this is about to start flying, I think. Oh, shiznacks. Very nice. Holy crap. Contracts up almost 60%. Everyone, basically like late bulls, are trying to... Payday! Holy crap. Oh, I love it. Oh, I love it. With options trading, we're trading basically the derivative of the stock price itself. So it's a derivative based on time as well as volatility, etc., etc. So the mathematics behind options trading allows for big percentage gains while not having big percentage gains in the underlying stock. So you see how the stock price of the SPY only went up from what, like 386.60 to 387.70? That was only $1 move, right? So the underlying stock moved barely any percentage, but the option value shot up. Holy crap. %? Can we get 100%? Damn, bro. This is crazy. We're sitting right at VWAP as well. So VWAP is acting as resistance on the SPY on the 1 minute. But as long as this remains above 387.70, trying to look for like another play I want to enter with a full position. I'm just holding on to runners, man. Just want the... Wow, they're not allowing this to fall down to any levels of support. If basically like 387.70, as long as it remains above that, then this could keep on flying. But I'm gonna be loose with the runners. I'm gonna have a runners at, let's see, like, I'll let you guys know when I sell the rest. But we're up huge. So for people that have smaller accounts, don't gamble. This is up over 60%. You guys should like definitely take some profits and book profits. When you have a small account, the name of the game is base hits. So the more base hits you take, not only does that increase your confidence, but it slowly and slowly builds your account. Okay? So yeah, so just take base hits, take it in accordance to the percentage. Damn. Oh. Yeah, all right. If this breaks, it's gonna be 100% play. Please give us 100. Yeah, all right. Almost. Damn. Crap. Almost. Come on. All right. 100. All right. There was 100. Okay. Thank goodness. 100% play. All right. Nice, nice, nice. Very good. So yeah, now this starts to become a good shorting opportunity. So make sure you guys have booked profits. Now things look. So once again, we're holding above the 38.2% fib. We're holding above the 23.6% fib actually of this candle. But if we can remain above the 38.2% fib of this candle, basically around like 388.20, this is going to continue flying. But the more we stagnate here, the better short. It's going to be a good shorting opportunity. So I believe we're 6 for 6 for the day. But pretty nice. Pretty good. 6 for 6, I think. Yeah. Hmm. So we're holding above the 38.2, right? But the longer it takes to remain above and without moving up, it's a better shorting opportunity. Yeah, we should probably take some puts, to be honest. Should probably take some puts, but I'm greedy. I want a retest of. Let's see. Let's see. This is risky. SPY puts 388.60 stop. We have to take it. Last trade of the day. We have to take it. This could rip up. Damn it. But it's a really good shorting opportunity, unfortunately. I hate it, but it is what it is. 1 second if we this is gonna be the last trade. So we're currently in shorts with basically 388.60 as a stop. This is have to take it, unfortunately. We could have ended the stream, but let's see. Unfortunate. It's gonna sell. We didn't break above the stop loss, but wait a second. Wait a second. Yeah, I'm out. All right. Cool. I mean, oh well. Next time, we had to take it. This was like this was a high quality setup, regardless. But not every trade works out. So we ended the day 6 for 7. It's 11 a.m. Cool. Yeah, all right. Hope you guys had a fantastic day. One moment. Hope you guys had a fantastic day. If you guys the one trade I take is his only L. No, yeah, and this was the riskiest trade, and we just had 100% play, so I was like a little less. No, I mean, it wasn't really even less patient. This was like a really good setup. Oh well, it is what it is. But yeah, hope you guys had a good day. Hope you guys enjoy. We had a really, really good day today.